The Hong Kong market has pulled back a little bit.
If at all they raise 5,000 crore completely, net worth will increase by a little more than 6%.
The next hurdle on the Nifty is the 20-day moving average, which is at 19,554.
We are seeing some inflation pressures developing, which the Reserve Bank may have to deal with down the road.
The PE multiple that we gave to these investors and the PE multiple that we are currently offering, so it's actually it's at a lesser PE multiple.
First tick on the index is absolutely flat.
There's a bit of worry about the economy slowing down.
Japan is booming, but after Japan, I believe Asian equities time is coming.
A nominal yield of 4.5% is not abnormal.
We're just up about 14 points in the Nifty. The sensex higher by close to about 26 points.
There is a game plan in place, and the timing and the scale of the announcements have yet to be made.
The stock is at a fresh 52-week high. It's up 11% today, about 10% now.
Markets, it's the mid-cap space which is really firing up. That index touched a record high, a new high again.
Well, that was the day so far, and it's been quiet so far, and let's hope things pick up. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel, of course, is joining us from the newsroom floor. Guys, hi, good afternoon. Let's just invert, right? And let's just look at what's up and not what is flat. So the mid-cap index, I think we need to begin there, because the mid-cap index has made a new high, a fresh high. And that is something which has been doing phenomenally well. So there you go. I mean, the new high is coming. I'll just quickly kind of list out that high, which is at, what, 534.25. That's a new high which was made. The small cap index is still a little bit away. I mean, because the structure there is a little different. The earlier high was made back in, I think, 2018, and there was a high in 2021. So there we are a little bit off still. The Nifty, nothing at all. 16 points, 15 points, that's about it. We are just about holding the 19,400 level. I'm actually just hugging that level. And that's nothing but where the Nifty meets the falling trend line, which we put out yesterday morning as well. So we're around there. We closed around there yesterday. The 20-day is at 19,554, which is the next level if the market wants to actually climb from where it is right now. Apart from that, the Bank Nifty will come up on your screen. That has got, I think, not very much going for it. But the level the Nifty Bank needs to climb and close above is 44,100 broadly. And that's about it. Broader market breadth is pretty strong, and that's largely thanks to what's happening in the mid and the small cap part of the market, which is doing just fine. So it's not a repeat of yesterday, but it's not very different either, because, because of the buoyancy that we are seeing in the smaller stocks, not the Nifty stocks. And that's been true for the last many days now, actually last 4 or 5 days now, where the Nifty is kind of pulled back, gone sideways, whereas the broader market continues to do quite well. Rima.
Outstanding, right? In 2023, the Nifty mid-cap index is up 22%. The frontline indices, Nifty and the Sensex, are up just 7%. In the last 6 months, the rally stands at 28% for the mid-cap index. And look at the individual names. REC has doubled since the beginning of the year. Polycab is up 93%, PFC is up 93%. These are all gains that we've seen in 2023 itself. Large stocks, not in the index, but they're flying. Trend, IDFC First Bank, Escorts, these are stocks which have seen a rally of close to about 50%. Again, all lifetime high, fresh highs on these individual names. Today as well, you've got so many double-digit movers. Dredging, Everready, insurance stocks have been doing very well. In the frontline pack, you've got HDFC Life, SBI Life. But outside of that, New India Assurance has a gain of close to about 7.5%. So that's the market, right? It's only quiet if you're looking at the Sensex and the Nifty. But outside of that, there is so much activity, and the mid-cap index, for simplicity's sake, has crossed that 38,500, right? The actual high may be 534, but 38,500 is now here on the Nifty mid-cap.
And Prashant, I'll tell you what, the small cap index is just 10 points away. I mean, from its high, the 52-week high for that index is 11,869. Today's high is 11,859. And we're not too far away from those levels. So let's see what the last hour brings. For all you know, the small cap index might join its mid-cap peer in celebrating what has been a phenomenal broader market move. But guys, you've discussed the broader market a lot. So let me come back to the big boys. And you'd have to say that on a day when the US 10-year flashes, in excess of 4.3%, would you really anticipate a big equity rally? I mean, hand on heart, I don't think too many people could have called that out. But that's exactly what's played out today. So there's something going on around the world, it's sort of in the larger scheme of things. And it's not just a rally on Wall Street on a few technology stocks. It's spread throughout Asia. In fact, most of the Asian markets have ended on a pretty positive note. European markets are up 1%, depending on which benchmark you're looking at. DAX, CAC, FTSE, the Spanish market, Italian market, all these markets are up about 1%. So comparatively speaking, for us, the rally is not really in the headline index. It's more in the mid-caps. But that has been another phenomenal trend that's played out. For now, equity markets, perhaps ignoring the kind of implication this rising bond yield is indicating. The converse, of course, argument is that equities have been faltering over the last 1 month. We've not had an equity rally, and perhaps it has been priced in. Well, always two sides to an argument when it comes to the market. But right now, Nigel, I really think the day really belongs to the bulls, going by the way the mid-cap and small-cap indices and stocks are flying away.
Well, indeed, Surbhi, just look at the screen. I don't know what's going on. A couple of stocks have just taken off in the last few minutes. BHEL, I'm not sure whether there's some news that's come or not. The stock is locked in upper circuit. It's temporary freeze, 10% higher. I think half of that move has come just in the last 5 minutes. So pull up the intraday chart out there. South Indian Bank as well, they've got a new boss at the top. Well, that's moving with a lot of traction as well. It's now up closer on 6%. For this month itself, it's up closer around 20% odd. So there are clearly quite a few stocks that are doing a thing of its own. NMDC Steel, well, the stock is up by closer around 2%. It's moving very, very well. Remember, we spoke to the management just a week or so ago. And what they indicated was now they're lighting up the blast furnace out there and they hope to produce steel in the coming quarter. And for the year itself, they're targeting close to around 1 million tons of steel. So for the time being, it's holding with a gain of 2%. You look at it for the last few days, it's been moving very, very well. But let's focus on the indexes and let's find out what's the trade out there. Well, Mitesh, if you're tracking the Nifty and the Nifty Bank, you'll say, I didn't miss much today, right? Because it's not moved too much. But how are things shaping up? Or what are the levels you're looking at both on the Nifty and the Nifty Bank?
On the index value, good afternoon. One, we've suggested on Friday to cut shorts because 19,200 is my belief that will not be taken out easily. And while there are no signs of an uptrend, I think this market now is, on the medium-term chart showing signs of loss of volatility as well as trend. So it could be a range between 19,200 about 19,650. That's the broader range which I have, which I can possibly make sense of. And we could actually get some more pivot points as the choppiness goes on within this range for the next few days. But broadly, I think this should be a 450 point kind of a range. And on Friday, we tested the lower end. I think we're just on our way to possibly move towards the upper end of the range. So 19,600, 620 levels could be tested. That is where I think if you have any long positions, take profits over there. But today to take position on the Nifty will not be advisable because we are off 150 points, 200 points off the lower end of the range. So we're somewhere in the middle. If somebody's holding on to long positions, we've taken, on Friday or maybe yesterday, still is okay. You can just trail your stop loss. It's about 19,350. But otherwise, wait for the edges of the ranges to be approached and then take a trade. Try to buy near the lower end, try to sell near the upper end. On the stock side, Jubilant Foods is something, which is giving a reversal on the intraday charts. It's a buy with a stop at 484 for targets of 510. And Havells is another one which has come to my attention. That's a buy as well. We'll keep the stop at about levels of 1,300 and target of 1,350 can be.
Okay, thank you very much for that. By the way, the US 10-year yield has eased a bit. Yesterday, it went to levels of 4.35. It's come down to levels of 4.31. So a little bit of a retreat from the levels there. But Linde India is the stock which is on our radar. It's up 6% today. What's behind the rally? Sonal is here with the details. Sonal.
Well, it's a big outperformer. It's up 15 times from COVID lows of 378 rupees a share. And if I look at the data otherwise as well, it has delivered positive returns every year in 7 out of the 8 last years, calendar years that we are tracking. And the only year where it gave negative returns was 2019, and the negative return was just 3%. So it definitely has created wealth for the investors as well. Now, the company did upload a presentation on Friday, and there were some interesting takeaways from there. Remember, it's an industrial gas transmitter. Basically, it provides industrial gas to sectors like healthcare, automobiles, refineries, steel as well. So it plays an important role there. The company says they are seeing steady growth from the healthcare sector. They are also seeing consolidation, productivity improvement and expansion in the steel sector from clients like SAIL, Tata Steel, Vedanta, etc. And they expect to see greater demand there and also improving opportunities in the steel space. They have future priorities. They have targeted some markets, the likes of pharmaceuticals, which is growing very fast according to them. There's additional demand coming in from chemicals and paints as well. Railways, pharma, defense continues to be in focus, and that could be the big opportunity for them. Mobile fill at construction sites also is looking like a good opportunity. They're also looking at M&A opportunities in the bulk segment, and that is what the street seems to like. Now, as I said, it's an industrial gas company and is looking at demand across the board, where industrial gases like hydrogen, nitrogen, all of them are used as well. In terms of their earnings, in June quarter, they saw revenues of 721 crore rupees, which compares with 630 crore rupees on a quarter-on-quarter basis. Their profits were flat as well, but it has consistently delivered wealth to the shareholders, and today is also such a day.
All right, Sonal, thanks very much for that. I mean, in a way, it's like a proxy for the manufacturing / capital goods kind of play, and that's Linde India. And of course, although as Sonal pointed out, the numbers have been flattish, but there has been for the longest time this expectation, you want to call it, or that at some point, the parent is going to look at taking it off the market, I mean, a delisting or something of that sort, but, well, it hasn't materialized yet. The stocks, of course, run up quite a bit. Deepan Mehta is with us, Director at Elixir Equities. Deepan, good to have you with us here. I mean, your thoughts, Linde India?
Yeah, I know this is a company which from time to time comes into this kind of a zone where it just spikes up. We have seen such trading moves in the past also during the COVID time when this company delivered its best ever performance because of the demand for oxygen cylinders. But there could be some corporate action. One doesn't really know what is the reason for this particular spike. And mind you, it's quite expensive at these valuations. And broadly, it's a cyclical B2B business, so it cannot be trading at a very high P multiple. But as I said, there could be some corporate action or some news flow which we have missed. And in any case, the floating stock is extremely thin in an MNC like Linde India. So even a minor bit of purchasing coming in a concentrated manner from a HNI or even from an institutional investor could lead to such a spike.
You know, a few years back, 2-3 years, almost 2/3 of the company's revenues used to come from steel and metallurgical, as a result of which it was directly impacted by the cycles of, the steel industry. But now with its foray into pharma, defense, railway, in a way, it's getting a bit hedged as well. Deepan, afternoon, and thanks so much for joining in. BHEL, that stock has suddenly shot up. Is there any news that we've missed? What's explaining the rally that we're seeing?
Yeah, good afternoon, Rima. I think it's supposed to be the order flow coming into BHEL. See, what is happening is that we are seeing a nice scaling up of the capex cycle, especially in the power industry, and even thermal power investments are now finally taking place. And BHEL, of course, have been trying to get more and more into industrial projects, and they have got some order book position over there as well. So from that point of view, I think after many years, we are seeing a healthy order book position for BHEL, and the stock clearly has underperformed for the past several years or so. So there could be some bottom fishing or some opportunistic buying also taking place in BHEL. And if there's always the possibility that it could be on the privatization list, which if that were to be happening, then I think the stock would certainly go up even higher from these levels, because basically BHEL is sitting on prime urban land as well, where they have their factories, and that a private investor or private owner could certainly unlock. So from a value perspective, BHEL is definitely attractive. And now after many quarters, we are seeing the order book position also pick up for BHEL, which is why I think the renewed interest. In any case, I think a lot of mid-cap stocks are in focus, and people are trying to find new ideas every day and watching out for stocks which have not moved up. So that could be one of the reasons why BHEL is seeing this kind of buying.
Yeah, I just want to add that the kind of volumes that BHEL is doing at this hour is quite phenomenal. The volumes are over 6 crores. Usually, I mean, we're looking at 2 crores plus, but the numbers are absolutely blowing through the roof today in terms of just the sheer volume that this trade on BHEL is clocking. Yesterday, BHEL announced, a reasonably big-sized order, 4,000 crores of an order that they're executing for Adani Power. setting up turbines, etc. But, that's usual course of business. It's definitely a big order, but, this kind of move, as Nigel pointed out, sudden spike, 5% on volumes, which are 3 times the normal. Well, to watch this space to really figure out what's going on.
So Hormus tells us that the last time BHEL was at this price, 111, right? Was in May of 2017, so 6 years back, right? So that's the kind of an up move that we've seen.
Oh, yeah, absolutely. It's been a long, long wait for a lot of these capital goods stocks. But from capital goods, let's come from, basically old economy, come back to new economy, and that's where Jio Finance has been making a lot of the headlines. Of course, there's been some selling coming in because there are technical factors at play as well. A lot of the mutual funds on the passive side, they will have to sell down the stock once it moves out of the key BSE and NSE indices. But Nigel has more details on this. Nigel, what are you tracking with respect to Jio Finance?
Well, Jio Financial Services is in focus as it's trading a little bit lower yet again. So let's clear a couple of queries that we've been getting on the stock. Point number 1, what is the weight and what's the impact on the Nifty? Well, the weight as of now is only around 1% on the Nifty. It's dragging the index lower today by around 10 points. Now, as of now, Nifty has 51 names, right? But Jio Financial Services was scheduled actually to get excluded from the Nifty on Thursday. However, since the stock has hit 2 lower circuits, exclusion will now be deferred. Remember, the stock needs to not hit lower circuit, either circuit, for 2 days to be excluded. That's on the Nifty. So we'll continue to have 51 stocks on the Nifty. However, the S&P BSE indices, they will be excluding the company effective 24th of August. So tomorrow is the last day that we'll have 31 stocks on the BSE. And from Thursday onwards, well, it'll come down back to around 30 because they've already declared, an announcement on August 18th that they'll be excluding Jio Financial Services from all their indices. So that's the official announcement that's come in there. Just thought we'd clear out a couple of factors on Jio Financial Services. Deepan, I wanted your quick point on this one. Where do you expect it to settle?
Yeah, I think it's a bit difficult to specify where Jio Financial will settle. I think very difficult to estimate what the future potential is, considering that we have the Reliance Group, which is going to put its full muscle power behind the stock. And I think 280 was the discovered, 262 was the discovered price, if I'm not mistaken. And that's a fair price. I think difficult to call where exactly it will actually land up. And we need more information in terms of the future plans of Jio Financial as well. No doubt, I think it's a great, exciting industry, and certainly they will use technology and they will lend at the retail level. But what are their targets and how the funding is going to take place? So a lot of questions remain unanswered, which I'm sure the management will address the next few weeks.
Okay, that is with respect to Jio Financials. Well, since it is such a sizzling mid-cap, small-cap day, let's take a look at some more stocks that are on the move on this side of the market. A lot of smaller names as well. Rainbow, Medicare, Concord Biotech, the recent listing, up about 6.5%. You have HBL Power Systems. But there's no stopping this stock, HBL Power Systems, which among other things, I think also does a fair amount of work when it comes to the railways, signaling, etc., and safety systems. This stock is up 7%, taking its monthly tally to 45%. Now, that is the power for liquidity chasing mid-cap ideas. Deepan, I don't know if you've seen this company or the way the stock has been moving. Any thoughts here? If not HBL Power Systems, would you look at anything else in railways, or is it a very crowded space now? I mean, are you worried about the kind of moves that we've already seen on railway stocks?
See, I think there'll always be correction in railway stocks, but next 2-3 years look very, very good for the rail companies, especially those engaged in railway projects. We are expanding the railway network and modernizing it, increasing the safety features. So as and when I think projects are announced and orders are placed, these companies will start to do well. I think this is true for a lot of other infrastructure builders as well. I think if you look at the road construction companies, across the board, they're sitting on average order book position of approximately 3 years or so, and call it operating leverages or better bidding, qualifying or bidding rates. Their actual operating profit margins also are starting to inch up as well. Balance sheets are in great shape. So this is a great time for all capital goods manufacturers, whether it's electronics, electrical, road construction. I think across the board, we are seeing very good traction taking place over there. But from an infrastructure perspective, a couple of names come to mind. Of course, one can't but invest in L&T. Disclosure we and our clients are invested. Every now and then it is winning an order book, an order which is in excess of a few thousand crores or so. So clearly the order book is shaping up pretty well over there. And we were quite impressed with the numbers which came from ITD Cementation, which I think is amongst the best in class when it comes to operating profit margins and balance sheet quality as well as track record.
Okay, do stay on. Need to slip into a very short break. On the other side, we'll also invite Rupen Rajguru of Julius Baer on the other side. Stay tuned.
Clean balance sheets and bold ambitions. Step into the future of India's banking sector at the most anticipated event of the year. Witness a remarkable convergence of visionaries, industry experts and top leaders as they size up the risk-reward roadmap, map out strategies to achieve unparalleled growth and achieve financial sustainability.
Nucleus Software presents CNBC-TV18 Banking Transformation Summit.
Welcome back. The big headline today has been this huge run on the mid-cap and small-cap side of the market. The mid-cap index hitting a fresh all-time high today. Prashant earlier actually pulled out the list of stocks that have risen the most on the index in the last 1 year or so. So let's actually pull out some of those names. You've got Adani Power right on top, 95%. PFC, some of these financing companies on the power and the railway side, PFC, IRFC. Dixon, interestingly, though it got into a lull, in the first quarter of this year, the overall gains are not bad. Polycab, phenomenal show after the first quarter. We've seen the way that stock skyrocketed, and the others come up: IDFC First Bank, Lupin, Piramal. It's a long list of winners. Many interesting names. Even Tata Tele Maharashtra, by the way. Trent has done well. L&T Finance, Escorts, and Godrej Properties, to name a few, where gains are in excess of 50%. Dipan, it's a long list of winners. Take your pick. Thoughts on any one or two of these stocks that you'd like to leave us with, where you feel that, despite a huge run-up, perhaps, there's still more steam left ahead.
Yeah, I think, if you look at Astral, one of the more expensive building material companies, but phenomenal track record. And management is very optimistic of the earnings going forward also. And it's, I think, true across the board for all the plastic manufacturers, be it Supreme Industries or Prince Pipes, and even Finolex Industries for that matter. I think this Nal Se Jal program of the government is clearly driving demand for PVC pipes. And the way we are seeing real estate sales also pick up, that's very positive for CPVC pipes, which go into plumbing. So from that point of view, I'm pretty bullish on that particular category. Stocks certainly have run up, but they're all forecasting at least a 15-20% type of a volume growth. And now that prices are generally stabilized, we could expect even margins to improve. Having said that, these are companies which we and our clients are invested in. So from that point of view, one is to keep in mind these disclosures.
Car Trade Tech, they've made some acquisition. Have you had a look at it?
No, Rima, I think we're not tracking Car Trade per se, but quite impressed with the way it has turned into profitability.
We can hear you. Go ahead.
Yeah, so we are not tracking Car Trade, but certainly I think the way the stock has performed and the fact that it has come into profitability, being kind of a new age company, certainly merits a look in. But on the whole, I think, we need to understand the business model more precisely for Car Trade, and these acquisitions also could be slightly margin dilutive. But certainly, I would want to comment on the stock because I don't have a complete handle on what the way forward is for the company, but a lot of positive news flow. So I'm certainly going to look at it more closely.
Okay, all right. Dipan, by the way, Surabhi was reading out the list of winners, right, from the end of March, 28th of March, in the mid-cap pack. There are only 3 losers, since that time, since the 28th of March. It's quite incredible. There's Hindustan Zinc, there's Gujarat Gas, there's Petronet, and then there is Fluorochem. But I think that's only because they'd done quite a bit earlier. Things like Fluorochem had gone from, I remember, 1,500 to 4,000 plus. Petronet maybe didn't do very much. Gujarat Gas had a decent rally. 4 actually, not 3, but 4 losers. Only 4 losers in the mid-cap universe from the 28th of March when this particular rally really began. So you can look at different time points, but the move really began, not just for the mid-cap index, but the small-cap part of the market also exactly at the end of March. Ruben Rajguru is with us. He's head of equity investment and strategy at Julius Baer. Ruben, good to have you with us here. Thanks very much. So we've got officially now, I don't think we needed the assurance that the mid-cap index was at a new high because, stocks have been making new highs, but the index is now at a new high. So it's still, so much, the breadth of the move is so wide, right? And what happens is it loops in more and more newer, smaller sectors in. Like, for example, insurance out of the blue. I don't think anything new is happening in insurance. New India Assurance, there's GICRE, the reinsurer. So all kinds of moves here. So do you stick to the core portfolio or start to look for newer ideas here, Rupen?
Yeah, hi. Afternoon, Prashant. As the old saying goes, worst of mistakes are done during best of times. So we have to be aware of it, and history often rhymes. One of the key factor which is driving particularly a big momentum in mid and small and even micro caps is clearly liquidity. So there are two aspects to it. One is the overall domestic liquidity, which was always pretty strong. So that was there. But in last 5 months, what we have seen a deluge of liquidity from the FPIs. So while the FPI flow essentially comes into large caps, and that has led to buoyancy in the large caps. So typically, a lot of the flows of HNIs, retail gets into mid and small caps. In fact, as per the latest AMFI data, a record number of new folios have got added into small cap funds. The size of small cap funds are 20, 30, 1,000 crores. Mid cap, small cap funds, these are huge. So essentially, whenever the liquidity is very high and ideas are limited, you tend to get down into the quality curve, or you look into relative plays. So I would say at this moment, clearly we expect, one should be cautious towards, the kind of huge run-up which we have seen in some of the mid-cap, smaller, particularly small-cap, micro-cap names. Definitely, we have seen this movie played earlier, so we have to be cautious, and probably on corrections, I would be bar into that segment, but at this moment, would be a little bit cautious.
All right. Hi, Rupen. Good afternoon. Rupen, I wanted to ask you about capital goods. That as a space has come back in style. And, the street is quite bullish on manufacturing and capital goods. You think that it's time to take money off the table from here on?
Yeah, hi, afternoon, Nigel. This one theme which has done phenomenally well in this bull market of last, say, 2 years or post-COVID is the manufacturing and investment theme. And I think that's the theme has come back into vogue after 10 years of lull, right? It peaked out in 2008 and thereafter till 20 did not do anything. So typically in a cycle, what happens, Nigel, initially, it starts with the order flow, which is what has happened, and then leads to operating leverage. The margin goes up 2x, the ROE goes up to 3x, and the stocks goes up 3 to 4x. And that is what we have essentially seen in that segment, right? A lot of the stocks have gone up 3 to 4x in last 2 years. From here on, what we believe, that low-hanging fruit of re-rating is over. Some of these stocks, and in fact, if I were to add defense also into this play, from initially 10, 12 PE, all have gone into 30, 40 Ps. From here on, the stock price will mimic the earnings growth. So far, so good. No complaints. Earning growth has been there, and that's why stocks are witnessing momentum. But we have to be cautious that if that gets into a speed breaker, that is, the earnings growth does not come through, that segment is vulnerable for derating. So the way I would look at it, Nigel, if earnings growth comes through, the returns will mimic the earnings growth. But if the earnings growth does not come through, actually we might see a negative return by way of derating into this stock. So I would say we play into those stocks wherein there is a comfort on earnings, as well as, because valuation comfort is probably not there, but look into the segment where at least we have an earnings comfort.
So, Rupen, that leads us into the next question, right? The earnings comfort. Consensus is currently pricing in about a 15 to 16% earnings growth for this year and next year. But there are many experts who believe that there could be some earnings downgrades in store, and the actual earnings growth could be closer to 10 to 12%. So how comfortable are you with the earnings, from here on? Because in Q1, the top line growth was not that great. Nuvama did some analysis, and they said, they analyzed all the BSE 500 companies, and the revenue growth was just 6%. Part of it was driven due to price deflation, but just 6% top line growth, and 30%. That's the breadth. 30% of them actually reported a revenue contraction, and the fear is that that could, get worse going ahead. And plus even margin expansion, right? How much more from here on? So quite few people are calling for earnings downgrades from here on.
A good observation, Rima. And, here I would say, if before we get into how do we see it, if we step back in last 3 years, for, I think the top 500 companies, at an aggregate level, the earnings actually has doubled. I think pre-COVID, it was 5 odd lakh crores or 5.5 lakh crore, and last year it was close to 10.5, 11 lakh crores approximately. So it has actually doubled. So we have compounded the earnings more than in 3 years, around 23-24% we have compounded the earnings. from here on, we have to look into what are the growth engines, right? Because ultimately earnings growth is linked to the overall growth in the economy. And in economy, if we split into three parts, essentially the domestic consumption, investments, and exports, right? So I think nobody's questioning right now that the investment is pretty strong. So we have seen the early cycle, we are in the mid cycle. So the investment story should be strong. Within consumption, if we break down into the urban and rural, urban and probably high-end consumption is doing, high-end is doing exceedingly well, urban is doing okay, rural is struggling, expected to pick up. Exports is where we are seeing, globally there are challenges and that is getting impacted. So all in all, to answer your question, while the consensus is actually is spending almost 20% earnings growth for this financial year, clearly I would say that is vulnerable for some kind of downgrades. That is what we might see as we move along. And do we see a big downgrade? I would not believe so. So we believe that still we would get into, from next 3-year perspective, 13 to 15% earnings growth is very much possible, because the financial system, both at a banking level as well as at corporate level, is under levered, and I think that leverage will help the overall earnings growth. So to answer your question, might be some downgrades, but still the story remains pretty strong out there.
Okay, so you seem to be still quite convinced. Rupen, you do like financials, right? I believe that's still an area that you're optimistic on. Now, here, this whole thesis about banks falling, I mean, I'm wondering if you're reading anything more into it. The Nifty is down about 3% from the peak. The Bank Nifty is down 5% from the peak. And mid-caps are at their peak, as we've been discussing. So is there anything further to read into it? Or would you just attribute it to, technicals, maybe some FPI selling here and there? Or is this fall in the Bank Nifty telling us something that we haven't fully acknowledged and looked at yet?
So Surbhi, in the bank index, if I were to look through the top three components into that, right? The largest private sector bank went through a merger process. So, there were a lot of doubts about how it would be treated on the liquidity perspective, weightages and all that. So that has been a relative underperformer for a variety of reasons, because people also want to wait and see how the actual merger will play out. While we are positive on that, but I think that has led to underperformance of the largest private sector bank. In fact, as far as the largest public sector bank is concerned, the numbers and all has been pretty good. But amongst all the banks, large banks, on capital adequacy, while it is still much ahead of regulatory requirement, but it has the lowest CAR of closer to 10.8%. Right, so there is always that thought that whether it'll come to the market to raise capital or not. And the other second largest private sector bank actually had got massively re-rated last year around. So probably it's taking a pause. But from here on, what we believe, banking as a sector is probably one of the few sectors which has a very strong earnings right now, and it's trading at a valuation which is much below its 10-year average. So it actually makes sense to be buying into banking sector per se. And I think one important factor which probably market is not recognizing right now is that with international rates being so high, upwards of 5%, so some of the corporates, blue chip corporates and all, which were erstwhile borrowing it from overseas market, while actually look into borrowing it from the Indian banks, because now there is the rate, there is no rate arbitrage out there. So that might lead into a decent amount of corporate growth for the banking system. So net, to sum it up, we are positive on that, and at this juncture, we'd prefer the large cap banks.
Okay, all right, got that. Rupen, good chatting with you today as always. Thanks very much. A little short on time, but we enjoyed the conversation. Thank you for making time. Well, with that, let's move on. Colgate is the next stock on our radar. Our colleague Mangalam caught up with Prabha Narasimhan, MD and CEO of Colgate-Palmolive India, at the Colgate Analyst Day that took place today. Let's listen in to the commentary that he picked up.
So I think immediately after COVID, to around the middle of last year, the oral care category in general across toothpaste and toothbrush did see a dip as inflation really pinched and consumers cut back on everything that they felt they could cut back on. What is fantastic is over the last few months, we are seeing it come back.
happens to the EBITDA then? That stays constant, or does that increase in line with the gross margin expansion?
So we don't have a stated position on EBITDA. What we are saying is that we will put in as much money as is required to fund the growth that we need in terms of driving top line growth. EBITDA margins are already really healthy, so the effort will be to maintain them there and thereabouts in the ballpark of where we are at.
A category as penetrated as yours, the big top line levers would, one, be increasing usage, second would be increasing your market share, and third would be going up the value chain in terms of premiumization. What are you focusing on and how much?
So as the market leader, I don't think we have a choice to focus on one or the other of these, Mangalam. So firstly, we are about half the oral care category, and we do see it as our job to grow the overall oral care category. And we are committed to, as a philosophy, better oral health for all of India. So that's, I think, driving the oral care category by driving usage. I know I've said this before, but only 20% of urban consumers brush twice a day. Almost half of rural consumers don't brush every day. So moving these two and driving category consumption really is important to us. The second is we have huge opportunity to grow share of our core brands, which is Max Fresh, Colgate Strong Teeth, and Colgate Active Salt. So that becomes then the second pillar of our strategy. And the third one, like you rightly said, is going up the value chain into things like, for example, Colgate Total, which is something that we are very keen to invest behind. We've already started investing behind Visible White last year. We have a new gum launch in PerioGuard, which again is at a premium. So we have a lot of offerings coming at the premium end, which becomes then absolutely the third leg of our strategy.
And what about the non-oral care bit? I mean, you have stated that you want to increase your share of revenue coming in from the personal wash and personal care categories as well. Also leverage Palmolive of Colgate Palmolive. How does that come about?
So that becomes then the fourth pillar of our strategy, which is really about diversification and getting more business outside of oral care. The first port of call on that being Palmolive. Palmolive is an underserved equity in our portfolio. It actually has about 67% awareness in this country, which is quite incredible when you think about all the new brands fighting to gain awareness, and then you have a brand in the portfolio that already has 67% awareness. We've done a little bit of work on this brand to understand root strengths and where it has the right to compete, and we've realized that it works. It sits in the area of cleansing. So body cleansing, hand cleansing, and that's where we're going to double down and put some effort. We have a huge global portfolio and a global product technology in Palmolive that we intend to start bringing into India and driving, which really becomes the cornerstone of our strategy along with good communication.
So if you could put some numbers, what proportion of your revenue, say, comes from oral care in that it's toothpaste, how much of that comes in from toothbrushes and other stuff? What comes in from Palmolive, or rather personal care, and where do you like to see that mix going forward?
So without giving you, because we don't break the numbers up, what I can tell you that absolutely
range maybe.
The bulk of our business sits within oral care and toothpaste and toothbrush. A small proportion of our business sits in Palmolive, and our effort is really to grow Palmolive at least twice as fast as the rest of our business. And therefore continuously keep increasing its share as contribution to our total business. Just some facts though, we sell I think 2.2 billion tubes of toothpaste and nearly 800 million brushes. So large volume sitting in both of those. And then like I said, a relatively nascent Palmolive business that
so
has
you've spoken about
growth.
Three verticals, or three vectors of growth, then Palmolive being the fourth one. Let's talk about the fifth one, inorganic. What's the plan there? I mean, are you looking at personal care? Are you looking at strengthening your oral care equity itself, which I don't think needs strengthening? What sort of inorganic, what's the playbook here?
So diversification is critical to us. So our first port of call, Palmolive. Our second port of call is really to see what our parent company does and what of that could be brought into India, because Colgate Palmolive outside of India has a portfolio that straddles many, many more categories. So we are assessing what of those categories and what of those brands has relevance to this country. So that becomes the second port of call. And obviously I can't give you more specifics than that. And we are also equally interested in inorganic opportunities in this space as well. So we are in conversation on some inorganic opportunities, as most companies are all of the time. And again, not at liberty to give specifics on it, but it is certainly on our radar.
Okay, eyeing the M&A route as well. So some strategic interventions taken by the company, Prabha Narasimhan talking about it, to grow Colgate. We'll slip into a very short break. On the other side, as always, we'll tell you what you can buy today to sell tomorrow. Calls from our technical experts. Stay tuned.
India's banking system is at its best in terms of asset quality, while corporate balance sheets are at their healthiest. These twin horses are speeding India towards a $5 trillion economy. Join us to discover how digitization and financial inclusion are set to hugely broad-base India's growth, even as extensive use of technology ensures NPAs are proactively detected and controlled.
Nucleus Software presents CNBC-TV18 Banking Transformation Summit.
Welcome back. Just take a look at a few stocks. Panisha, biotech, well, that stock, it's in upper circuit now. It was already up close to around 15%, but it's moved a little bit high in the last few minutes. So I think that should come up for you on the screen. You have Eveready Industries as well. That's moved very, very well. It was as it is up. Now it's moved towards that 420 odd mark. I'm not sure, what's triggered that move, but that stock as well has spiked up in the last few minutes yet again. The management was confident about the second half of the year. But it seems Eveready Industries, the street has read that positively. And a couple of other names, Tilak Nagar Industries as well, has moved a little bit higher. There are so many stocks in the mid and the small cap space that are moving up. I think that list is unending. But let's get in Mitesh Thakkar to give us some buy or sell trades that you can reverse in the next couple of days. Mitesh?
Yeah. Nigel, one is McDowell's, which, I think after a few years of consolidation is ending very strongly. So take a BTST here with a stop at about 1023 and a target of 1050 can be looked at. And more of a, not a BTST, but more of a buy call is Satluj Jal Vidyut Nigam or SJVN stock. That's a buy with a stop at about levels of 57 for targets of 63.
For that, by the way, the Nifty has now dipped into the red, so it's trading just shy of the 19,400 mark, and it's the banks which are selling off. Remember, today is also the Fin Nifty weekly expiry, and there is some pressure. So State Bank of India is at the day's low. It's down close to about 0.6%. ICICI Bank has seen a knock in the last 2-3 minutes, and HDFC Bank has been under pressure throughout the trading session, and it's still down close to about 0.4%. Jay Bala of cashthechaos.com is with us on the show. Jay, what have you made of this party that we're seeing in the broader markets, and what does it tell you? Does it make you optimistic or does it make you a bit cautious?
Yeah, thanks for having me on the show, Rima. The markets are behaving as anticipated. I had highlighted 2 weeks back that the participation is going to be on the side markets, and that's the reason why you're seeing activity in mid cap and small cap names. But the Nifty is bound for further drop after a slight bounce. This bounce that I'm anticipating should get contained in the region of 19,600 to 19,500 on a max basis. So once that's done, I'm anticipating Nifty to drop somewhere in the region of the 2022 area. The price action was about 18,800, 18,400 zone. That's the anticipation. That's been the case since the beginning of August. The main trigger for this is going to be coming from the global markets. The AI-led rally, I think that's exhausted and that's going to lead the markets lower.
Okay, so you do think that this pullback is done, the markets are heading lower. Jay, then, if you're convinced of that trade, how can it be played beyond, obviously positions on the Nifty? What else looks weak to you?
Yeah, IT is probably around the corner of a turn. If Nifty IT were to break below 3,500, I think that will be another sector that's going to turn lower. And FMCG, as I had pointed out 2 weeks back, that's come below critical support. So these are the two that's going to likely to drag the market. And Nifty Bank obviously has been quite weaker than Nifty for several weeks now. And the strength lies in capital good names and pharma names, but they are slightly different in the short term. Capital goods are making probably its penultimate high or the final high, whereas when it comes to capital goods is making the high, going straight to a high, and whereas pharma is seeing a pullback. So further pullback is likely to get bid for the pharma sector. So they are both bullish, but in a slightly different manner.
All right. Hi, Jay. Jay, what about the IT pack? The Nifty Bank, you said, is getting a little bit jittery out there. Give us levels first on the Nifty Bank and then tell us about the IT space as well.
Yeah, see, Nifty Bank, the critical support at the moment has been broken, but the major support is about 43,300 and 42,800. 43,300, if the markets were to break for the Nifty Bank, it's going to be a very firm downtrend for the banking sector. The key trigger, as I've been pointing out for a few weeks, it's coming from the Indian 10-year bond yields. The bond yields have clocked a very significant low at 6.9 and change. And the recent high is about 7.25 is going to see the Indian bonds sell off, and that's going to have a bearing on the banking sector. Nifty IT, TCS and Wipro are the likely to be the leaders on the downsides. But we need to see a break of 30,500 on the Nifty IT index. If that's done, I think TCS and Wipro will drag the market for the sector.
Okay, got that. So quite bearish on the IT space and cautious on the overall market. Well, for now, things are still holding up. We've still got a 10-point move on the Nifty and the mid-caps are flying away. We'll take that break and we'll come back and continue the conversation on the other side.
a robust and thriving economy, the convergence of the banking sector's scale and the agility and innovation of fintech companies holds the key to transformative growth. Witness industry experts and pioneers share their valuable insights on how technology-driven collaboration can lead to a connected, efficient and innovative financial landscape.
Nucleus Software presents CNBC-TV18 Banking Transformation Summit.
Welcome back. Just a few minutes to go of trade, and the Nifty has not moved. We're as flat as can be. The Nifty Bank is down 20 points. So that's the move on the frontline indices. But Jay, since the Nifty and the Nifty Bank are behaving a little bit boring today, let's talk about more interesting things. Tell us about crude. How do you see that one moving from here? And also Bitcoin. It's been actually the outperformer of this year from bombed out levels. Where is that one headed?
Yeah, see, I think we are entering a phase of risk off, and the message from both Bitcoin and Brent is uniform. Bitcoin saw a fleeting break below 25,000 a couple of sessions ago, and that's signal that the Bitcoin is heading somewhere close to 14K. When it comes to Brent, again, the recent high of 88, some around that ballpark, is going to hold. And along with risk assets dropping, I think Brent is going to go lower, much below 60s and 55s. That's been my thesis for several months now. So the message from both these asset classes are the same.
Jay, you're bullish on Nestle and Havells. Take us through the thesis here.
Yeah, see, the recent high that we saw Nestle last month, it's looking like an incomplete move, but the conviction is slightly lower than usual, but so be bit cautious. As long as the stock can hold about 21,400, I think it's setting itself for fresh record highs to somewhere in the region of 23,600. Havells being in the mid cap space, I think that has a better probability, I would think, because mid caps and small caps continue to, I believe the index is likely to clock further highs. So bullish on Havells with a stop below 1255 with an objective somewhere close to 1400 fresh 52-week highs.
Okay, that's a view on Havells. What do you make of Reliance now? Jay, of course, it's been going through all kinds of corporate actions, demergers, a lot of other factors weighing on the stock. Anything on the charts? Any perhaps range range trades that you can talk about, or levels that one should keep in mind?
Yeah, I think 2440, 2450 is very critical for Reliance, but my suspicion is that it's not going to go anywhere between, it's going to get stuck between, say, the pre-Geo spin-off, financial spin-off, and 2023 low of about 2180. It's going to be stuck within the range with a slightly negative bias. I think it's made a medium-term top, but it's likely to see a phase of negative consolidation within this 2600 to 2180 range.
By the way, at a time, on a day when most of the life insurance companies are doing well, Nippon Life Insurance, Nippon Life India has been under pressure. So that's down close to about 1.5% in trade. So it's not really participated. And India Cements and Sun TV, these are two other stocks where you are seeing considerable weakness, 2.5% lower and on pretty large volumes. On the flip side, Tata Communications has surged close to about 4.5%. So looking quite smart over there. And a couple of NBFCs, so L&T Finance Holding, that surged. M&M Finance, M&M Financial is up close to about 4%. Jay, what's the overall construct on the global markets, US markets, and what's that telling you? Yesterday, the 10-year yield surged to levels that we've not seen since 2007, 4.35%, and yet the Nasdaq rallied 1.5%. So, a bit of confusing signals.
Yeah. If you go through my prepared notes, of a few months ago, I've been pointing out, as when the 10-year yields for the US crossed 33.86, I had mentioned that fresh 52-week highs or multi-year highs are due for the US 10-year yields. It's not a surprise that it's happened. I think the path for the US 10-year yields is further hardening, and we are likely to see somewhere close to 475 to 500 bips. When it comes to US equities, I think Nasdaq has seen a very significant turn. That's not visible yet in the Dow Jones and S&P, but we are likely to see that soon. We're going to see a short-term bump up there too. So, the FANG stocks and the semiconductor index, which houses the AI stocks, they are all made a turn for the negative side. So I think we're going to see further downsides for the US equity markets.
Okay, all right, got that. Good talking to you, Jay. Thank you very much for being with us and taking out the time today. Appreciate your views. We are now set to close down with a slight minor red tick on the Nifty, but the day really belongs to the broader markets. The mid-cap index flying away, hitting fresh highs, 1% up on that index, up and about. Before we get to that mid-cap excitement, just want to quickly wrap up what happened on the frontline space. We're absolutely even Steven, because there are no clear sort of takeaways on any side. SBI, ICICI Bank, HDFC Bank, Infosys, these are your big boys, your large blue chip stocks that have kept a lid on gains today. Most of them down, even TCS, Counter TCS. So basically banks and IT put together, that's enough pressure for the index. Throw in some more names like a BPCL and Cipla. These are names on the downside. But then to prop things up and counterbalance on the upside, you had something like an ITC, 1.5% up over there. L&T up about 0.5%. And a Bharti Airtel to an extent. Some auto names, Hero Moto and M&M, which were providing some support. Net result was an absolutely flat day for the index. But that's not the real headline, is it, Rima?
No, the market was quiet only depending on which market you were looking at, frontliners or mid-caps. Mid-caps is where all the action was. Mid-cap index has gone ahead and hit a fresh all-time high level today. 38,500 conquered on the mid-cap index, and it's going to go home at the day's high with a smart gain of close to about 1%. The small-cap index also moving up nearly 1%, very strong advance decline ratio. And these two indices have rallied more than 20% since the beginning of the year. Double-digit gains seen in many stocks. Dredging is 17% higher. Everready gained close to about 12%. It's a fresh 52-week high on that. You had strength in Shalby. BHEL had a pretty smart up move towards the close of trade. Liberty's shoes, 10% gain on that. Very few stocks where you saw some weakness, but I think Aurobindo stands out, and Nimesh had highlighted that. But Aurobindo Pharma goes home with a cut of 1.5%.
Absolutely, and the next couple of days, that big conference is going on, right? The Motilal Oswal conference. Aurobindo, by the way, the management was there at the Motilal conference this morning, so we'll start to get more indications of insights, commentary, outlook, and those kind of things, which I think will influence many of these stocks as well. Lots of corporates, by the way, attending that one. 1,400, actually almost 1,500 stocks higher and about 800 stocks lower. That's the market breadth, advanced decline ratio. But I think we've mentioned bulk of what went up, and it's a huge volume day once again, by the way, for stocks which went higher. So many names which did very well. I think you guys mentioned hospital names like Shalby, Rainbow, and the others, Yatharth, and so on and so forth. Some of the dredging companies like Dredging Corp was up. There was these insurers were up. Everready, I couldn't find any news flow really, but I mean that was another one which was up strongly. Network 18, so group company 6% higher in terms of trade. Linde India we discussed. BHEL was a mover in the last. Started moving at about 220, 225 or so. NBCC, Welspun Industries. And I could actually go on with many more names which did very well. Talbros Auto has been such a big mover, and that is almost 1,100 rupees now, but it's doubled this year, 6% higher on Talbros. So it's a pretty good session for mid caps and small caps. It's a wrap on this edition of Closing Bell.
I was just, Prashant, I was only adding a little bit of information on Jio Financial Services because I was going through the BSE notification. The removal from the BSE index has also now been pushed back because of the circuit trading that's happening, those technical factors. BSE has just said that they will now look at a removal from the BSE indices on the 29th of August, which is Tuesday. That is if we don't get more circuit days, if we can have 2 clean days of trading. So some pushback over there.
All right. That's it from all of us here. Thank you very much for watching. But don't go anywhere. Our program Commodity Champions will come up next. Stay tuned.